Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to look at the EURUSD, and basically it's going to be the smart money concepts, Confluence establishments based from the trade execution we took this week. I make the GBP USD case study available in the YouTube channel, and the link to that is in the description section to this video. This are set up we shared in the free Telegram community. So if you're interested in following some of our free setup, then you can join the free Telegram community. So, last week during the weekly Forex Focus review, I pointed out this minor buy side liquidity. We saw how price, came into the rejection block, and clearly what we can see is price mitigated the mean threshold of the rejection block. So we can clearly see that here, that price here mitigated the 50% of this rejection block, and then we had the fall of price to the downside. Now, what we can see is this was the previous week price delivery, and then we saw price returning back to the upside on Friday, where we had this concluded movement that gave us a down close week. After we had Thursday gave us this bullish impulse, because we also pointed out the daily bullish mitigation block here, and we can see how price returned to mitigate that and give us the bullish impulse back into the rejection block zone. So I was looking forward to see how price was going to take out the minor buy side liquidity and mitigate the sponsorship zone we identify here. And now, but what we can see clearly is price have been respecting the rejection block zone, because we can see volume failing to close above the consequent encroachment of the rejection block. And now we can see that once they gave us this down close candle that followed sponsored bearish movement to the downside on Thursday, and now this is price currently delivering on Friday. So what we can clearly see now, last week I told us to expect the possibility of price taking out the minor buy side, but now what we can see is price created this high on Monday, price now created this high again on Wednesday. So you can see here we have relatively equal high points, so we still have this buy side liquidity resting here. But what we can see is that price failed to take out the buy side, because now price is still reacting at this other rejection block we identify here, because price also mitigated that rejection block. Volume failed to close above. We had the downward movement to the downside, and what we can see, sweep of buy side, we had bearish momentum. Price returned down to the newly created rejection block, and clearly you saw how price have been respecting the consequent encroachment, volume failing to close above that, and now we have this bearish movement failing to take out the minor buy side liquidity. So last week what I clearly draw our attention to is the daily bullish order block that we have here, because this down close candle was the previous week Friday candle that was delivered. So I expected to see more dip of price to the downside to mitigate the daily bullish order block, and then we have the possibility of our bullish momentum to take out the minor buy side liquidity. So for the GBP USD mitigated its daily bullish order block, but we can see a Euro USD did not, and now we had the bullish movement, but then price failed to take out the minor buy side, and what we can see is this price movement again to the downside. We're now having bearish momentum. So in the 4-hour time frame, what we can clearly see from the 4-hour time frame is within the daily bullish order block zone, we identify that we have this order block, the bearish order block, that was violated to the upside, because you can see we had this bearish movement, bearish impulse to the downside, and then price gave the bullish impulse that led to the change in state of delivery. So we identify this bearish order block that was violated to the upside, and what we can see from the 4-hour time frame, we also identify this inversion fair value gap. So what we can see was the movement in the previous week, and then Friday gave us this down close candle, and clearly what we can see is price swept this low. Now we have volume closing above this low, while we had this other bearish candle but failed to take out this low. Now we can see Sunday gave us that bullish impulse, just the way we also saw from the GBP USD pair. So we had this bullish impulse to the upside, price returning back into the rejection block zone, giving us this rejection candle again in the 4-hour time frame. on Sunday. This was the first 4 hour on Sunday that created this strong bullish movement. So we saw price took out buy side, in extension took out this swing high point, and we saw volume close below. And now we can see that we saw bearish movement to the downside on Monday. Price returning again back into this level where we had the change in state of delivery. And now in Confluence, we had this newly created rejection block zone. We can take this candle to be that rejection block zone, or we could just say we have the other block zone here. This is just, it's just sponsorship candles, but you just have to understand the ideology, the psychology behind this candle formation, not really trying to cram their names. So we can see this was the down close candle that really gave us this low that was created before the bullish movement. Price returned to the downside to mitigate that, because you can see internally within the structure we had this change in state of delivery for the bullish movement. Price returned to mitigate the candle that led to a change in state of delivery that further sponsored bullish movement that took out buy side, took out this buy side, and took out this 4 hour buy side again. Let's check the 1 hour time frame. So here in the 1 hour time frame, you can clearly see that. So you can see we had the dip of price. This is the daily bullish order block. We can see how price dipped to the downside on Friday, mitigating that zone where we had the change in state of delivery from the 4 hour time frame, which here we can see, we can just regard this as also a market structure shift which took place at this particular swing low points actually. And what we can now see, we have internal structure here. Price fell to the downside, took out this low. We had impulse that took out this high. Market structure shift. We're expecting a return for mitigation, and then we have the bullish continuation to the upside. Here you can see we have rejection block, price return, mitigated that, which is also a single candle order block. Price gave the bullish movement to the upside. So from the 1 hour time frame, what we saw is this is Monday delivery. So working towards Tuesday and Wednesday and Thursday. So basically now what I saw was this on Monday, how price fell back into the change in state of delivery price level in Confluence to the fair value gap from the 4 hour time frame. So what we can see, price fell, swept this low. We had the bullish movement. Let's clearly see that from the 4 hour time frame, because it was from the 4 hour time frame I identified those candle deliveries. So here we can see we had this down close candle, created this low, price fell, took out the low, volume closed above. So we can see price created this movement that fell to the downside but failed to take out this low point. We had another bearish candle that then took out this liquidity. And what we can now see, we had bullish impulse to the upside, closing above this candle that took out this candle low point, because this candle low point took out this candle buy side liquidity. And in extension, the volume closed above this other candle close price, the bullish candle. So I regarded this also as a single candle order block leading to a change in state of delivery, because what we can see is volume failing to drop lower. Price was taking out sell side liquidity, and we can see volume closing above. So I expected to see a return to mitigate this down close candle, and we have the bullish movement to the upside. So from the 1 hour time frame, what we can see is we had price swept this candle low, because this is a low candle, because this pullback went swept this high, price fell again, swept it. We have a rejection block here. Price created this movement to the upside. So I traded this price delivery into this fair value gap, which clearly also was identified from the 15-minute time frame. So what I saw was how this candle swept this low, and then we had the volume closing above the low. So I saw price creating this bullish candle in the 15-minute time frame. Let's get to the 15-minute time frame. In the 15-minute time frame, this was what I clearly saw in the 15-minute time frame. We can see that sweep, and it was now within the New York session. So we can see also we had this single candle order block, swept liquidity, volume went higher, closed above, leading to a change in state of delivery internally. So I expected to see price return to the fair value gap. This was where I executed this trade, and then anticipated to see price push into the drawn liquidity, the fair value gap. And I also was looking at the possibility of price dipping more higher to mitigate this bullish order block here that was violated here to the downside, because it's in Confluence in this fair value gap. But anyway, price just mitigated this fair value gap, taking out this buy side liquidity, trend line liquidity, and then we had a fall to the downside, looking towards the delivery on Tuesday. So back to the 1 hour time frame. Towards Tuesday, what I saw in the 1 hour time frame is what I just want to point out to you guys. This is not really an in-depth review, it's just to give you guys a quick review to what we actually looked into while I was sharing that in the free Telegram community. So this was what happened on Tuesday. Again, we saw this delivery, price took out this low, and then we had this movement. So basically I regarded price took out liquidity here, and then we had the push leading to a change in state of delivery, because this was a movement that took out to this low point. I know basically these are all internal structures. This is a consolidated price delivery. If you understand the Wyckoff, then you can understand how to also utilize such movements. So basically what I saw was we had a rejection block here that the mitigation of the week is not really traceable. So when I saw this, I regarded price mitigated the week of this, even though it's not to the 50% or the 25%, and then give us this that led to this change in state of delivery. So I fixed an entry here, looking forward for the bullish movement, but price returned to the downside to take the low. So clearly now it was in the 15 minutes time frame, because this should be the Asia session price delivery. Let's check the 15 minutes time frame. So here in the 15-minute time frame, yeah, we can clearly see that this was the Asia session price delivery. And I also pointed out in the Telegram community, the free Telegram community, that I do not really like identifying zones within the Asia session range. So what we can see was I placed the entry at this inversion fair value gap, and the stop loss was just below here. So you can see our price went back to the downside and took me out. But they're looking forward to when price swept this, because now price has taken out the Asia session low. Since I'm anticipating bullish movement, we had this change in state of delivery. So upon return back to this rejection block was another entry to continue bullish to the upside during the London session. London created now the low, and now we can see that bullish delivery to the upside. So we utilize this movement also to the upside. And New York session during the, I think this should be the delivery during the launch hour, back to the downside, mitigating this zone, this minor buy side liquidity that was taken out, which I also called our attention to in the free Telegram community based on the chart setup I was sharing. And now price dropped into that, and we had the bullish continuation to the upside. So for the bearish movement, I didn't really execute the bearish movements. So back to the 1 hour time frame, what we saw from the previous delivery again towards Thursday movement. So we can see how price dipped down into this fair value gap, and we had this bullish impulse that took out the buy side liquidity and this other buy side liquidity. So this was where we had the SMT divergence for the Euro USD in comparison to the one in the GBP USD. So we can see how price took out to this high and then fell to the downside. So basically I was just more on the bullish perspective that I failed to consider the inversion fair value gap that was created here, because price fell, respected the fair value gap, and we had the bullish movement to the upside. Price return. Then this was the Thursday price movement, expecting a bullish movement to possibly continue bullish to the upside, since basically I was trying to establish a bullish week, and that was in negligence to the daily time frame, looking at the fact that in the daily time frame price was failing to violate the mean threshold of the rejection block to further sponsor bullishness to take out the minor buy side liquidity. So we can see sweep of buy side, price fell to the downside. This did not take out this high. Neither did this push to the upside to really take this out and take this out. So we had a down close day on Wednesday that further sponsored this bearishness on Thursday. So what we can see from the 4-hour time frame was how we can see this candle weak and price return mitigated that and push. So basically there wasn't even reason for me to want to really consider taking a buy move. But then let me just admit that I was rigid, let me just take it that way, and then was just further still expecting bullishness, because I saw more bearishness here, so the possibility of a bullishness to the upside. Let's go to the 1-hour time frame. So in the 1-hour time frame was when I identified the fact that then we had an inversion fair value gap. So price doesn't really have the probability of aiming higher to this fair value gap I identify here before a sell movement, because what we can see is price failing to take out this high point. You get it, guys? And then we had downward movements that violated the fair value gap. First mitigation pushed price. Price fell, violating that. So that is going to serve as an inversion fair value gap. So it was from the 1 hour time frame. What we can see is this rejection block. And now price returned to the week of the rejection block, mitigated that. So we can clearly see that. Let's identify that. So we can see how price returned into that and mitigated the mean threshold, and we can see volume closing above the mean threshold of that price delivery. So what we can now see is how price now sponsored the bullishness, but then I was aiming for price to take out the buy side, just the way also in the GBP USD. So price respected the inversion fair value gap, and here we had the bearishness. So I wasn't able to take the bearishness because I was considering price dipping higher to take out this buy side because of this fair value gap, maybe the drawn liquidity next before we had the bearishness. This was after price didn't really play out with a bullish momentum to this level that I discovered that we had an inversion fair value gap here where price returned to mitigate, and we had the bearishness. And based on CTR from the daily time frame, one should know that we are expecting to see what the possibility of what a bearish movement, since we can clearly see that price never did mitigate the daily bullish order block from the daily time frame. So we now saw how price pushed, but then took out this buy side, volume closed below. So ours was to frame to see the possibility of a downward movement to this daily bullish order block before we can consider trying to take price more higher to the upside. So in the 15-minute time frame, that is where we can clearly see the Asia session give us this movement and now push price to the upside. We had the Asia session, so we should know that price would aim to want to take the Asia session high points if we want to go bearish to the downside. And you can see how price took out the buy side liquidity, the Asia session high points, and we had that fall, respecting the words inversion fair value gap. So we can see price fell to the downside. Price for the return to still mitigate the minor buy side liquidity that price took out here as a resistance, and then we had the bearish fall to the downside. So this is just a very quick one, guys. Cheers and God bless you all.